Good morning everyone. So this is Dr.Kausar, Assistant Professor, Department of Commerce and Management, BFGC KJ. So in this session, I am going to solve the problem given in the year 2018 for 14 marks, which is of estimated cost sheet. Let us will see the question. Tata Engineering Company manufactured and sold 1000 machines in 2016. Following are the particulars obtained. Cost of materials is 80,000, wages paid 1,20,000, manufacturing expenses 50,000, salaries 60,000, rents, rates and insurance 10,000, selling expenses 30,000, general expenses 20,000, sales is 4 lakhs. The company plans to manufacture 1,200 sewing machines in 2017. So you are required to submit a statement showing the price at which machines would be sold, so as to show a profit of 10% on the selling price. The following additional information is supplied to you. The price of materials will rise by 20% on the previous year's level. Wage rates will rise by 5%. Manufacturing expenses will rise in proportion to the combined cost of materials and wages. Selling expenses per unit will remain unchanged. Other expenses will remain unaffected by the rising output. So here they have given to calculate both cost sheet as well as the estimated cost sheet that we have to prepare for the adjustments given below. So for the cost sheet for 1000 machines 2016 year, we have given the details. The cost of materials, wages paid has to be considered in the prime cost. Manufacturing expenses as factory overheads, salaries, rents, rates, insurance, and general expenses has to be considered as administration overhead. In the selling expenses has to be considered as selling and distribution overheads. So by the sales value is given, you need to go for calculating the profit. Both in terms of unit as well as value has to be calculated. Then for the year 2017, there is a plan to manufacture. So additional 200 sewing machines is nothing but in the previous year 1000 machines. They manufactured the production units. For the year 2017, the estimated cost sheet they have to prepare for 1200 sewing machines. For that, they have given a statement. You have to submit a quotation showing the profit of 10% on the selling price, and also the price of materials has to be increased when compared to the previous year, it is 20%, wages has to be increased 5%, and manufacturing expenses will be increased in proportion to the materials and wages, and selling price expenses per unit will remain unchanged, and all other expenses will remain unaffected by the rising output. So this is the details given for the year 2017. Let us will prepare for the year 2016. Cost sheet for the year ended 2016, the production units is 1000. So here we made a table which contains of 3 columns. One is particulars, amount column and cost per unit. Let us will take one by one the items what are they have given for the year 2016. So the cost of materials is given 80,000. So if you are going to divide by 1000, 80 rupees is per unit. Wages is 1,20,000. So if you divide by 1000, the cost per unit will be 120 rupees. Therefore, there is no direct expenses. So we can go for calculating the prime cost is 2 lakhs, per unit is 200. So in the question itself, they have given that manufacturing expense is 50,000. So now we should go for adding the factory overheads as in that manufacturing expenses. That is 50,000 per unit, it will be 50 rupees. So we'll have to add to the prime cost, then we'll get the works cost is 2,50,000 per unit is 250 rupees. Let us will see what are the administration overhead given here. So one is salaries, rents and rates and general expenses. All the 3 values has to be taken here, as well as per unit has to be considered, calculated. Salaries 60,000 per unit is 60 rupees. Rents, rates and insurance is 10,000 per unit is 10,000. General expenses 20,000 per unit is 20 rupees. So now we'll have to add to this works cost altogether. It will be 3,40,000 and per unit is 340 rupees. So as there is no the adjustment belonging to the finished goods of opening and closing, so the cost of production and cost of goods sold or the office cost is one and the same. Then we'll have to add the selling and distribution overheads. So for that they have given the selling expenses in the question itself. It is 30,000. It has to be added to the cost of goods sold. So 3,40,000 plus 30, it becomes 3,70,000 per unit is 370 rupees. That is the total cost. Now we have to go for calculating the profit, both the value as an per unit. The sales value given in the question is 4 lakhs. So the difference between sales minus total cost is profit. So 4 lakh minus 3,70,000 is 30,000 is the profit value. Then per unit will be 400. The cost per profit is 30 rupees. So this is how we need to go for calculating the cost sheet for the year ended, that is for the previous year 2016. Now for calculating the cost estimated cost sheet for the year 2017, we need to have go for calculating some of the adjustment. So given in the question, so here in the question itself, we have to calculate the price materials for 1 unit will have to increase 20%. Wages also will have to increase for 1 unit, 5% has to increase, and manufacturing expenses has to be calculated by the combined cost of materials and wages. And let us will calculate the new material cost. In the year 2016, the material value is 80 rupees. 2017 it is 20% increase means 80 plus 80 into 20% is nothing but 16 rupees. Therefore, the new material cost comes to 96 rupees. Then we'll have to go for calculating the new wage cost, which is 5% increase as shown in the year 2017. Therefore, in the year 2016, the wage cost per unit is 120 rupees. 2017, 5% increase. So 120 plus 120 into 5%. 120 plus 120 into 5% is nothing but 6. Therefore, the new wage cost is 126 rupees per unit. Now we'll have to calculate the manufacturing expenses. So here we have to calculate the manufacturing expenses, both the materials as well as the combined cost of materials and wages. Is nothing but labor, what we are going to call. So the material and wages for the year 2017 has to be calculated by dividing the material plus the wages value of 2016 into manufacturing expenses of 2016. So in the question we have calculated that in the year 2016 the cost plus materials value per unit is 200 rupees here, and manufacturing expenses is 50 rupees. So for the year 2017, the manufacturing expenses, when we go for seeing the new material cost plus wage cost is 96 plus 126 rupees, it comes to 222 rupees. Therefore, 222 divided by 200 into 50. So here when we are going to calculate materials per labor, the new material cost and new wage cost should be added. Therefore, 96 plus 126 will become 222. The previous year material cost and wage cost is 200 into the manufacturing expenses for the previous year given in what we calculated per unit is 50 rupees. Therefore, 222 by 200 into 50 is the manufacturing expenses for the year 2017. It is 55 rupees 50 paisa per unit. Now we'll have to go for calculating the profit for on 10% on selling price. As you see, so this is the statement which is showing the quotation price or estimated cost sheet for the year 2017. The production units here we have increased 200 units, additional units have been increased for the year 2017. Therefore, the production units given in the question is 1200. And this is the table we have shown for the preparation of the estimated cost sheet or the tender or quotation. A table which contains of 3 columns. One is particulars, amount and cost per unit. Let us will go for calculating with the help of cost per unit. The materials is 96 rupees is the new material wage, new material cost. In the 1200 production units, it comes to 1,15,200. Then direct wages, the new direct wage we calculated here, it is 126 per unit into 2,200, it comes to 1,51,200. Both together, if you are going to add, then we are getting the prime cost is 2,66,400. Therefore, cost per unit comes to 222 rupees. Then we'll have to add manufacturing expenses. The manufacturing expenses per unit we calculated, that is 55 rupees. 55 into 1,200, it comes to 66,600. Therefore, the works cost comes to 3,33,000. The per unit will be 277 rupees 50 paisa. Then we'll have to add the administration overhead, because the administration overhead it remains the same in case of per unit. So whatever the per unit values are calculated in the previous year, it will be same, it has to be considered for the year 2017 also. Only the number of units are different. So in the previous year we calculated for 1000, now we have to go for calculating for 1200 units. So salaries In the year 2016, it is 50 rupees per unit. Rent, rates and tax insurance is 8 rupees 33 paisa. General expenses are 16 rupees 67 paisa. Now we have to calculate with the help of 1200. It comes to 60,000, 10,000 and 20,000. Therefore, the cost of production and cost of sales, it comes to the total value along with the works cost, 3,33,000 plus 60,000 plus 10,000 plus 20,000, it comes to 4,23,000. Therefore, the cost per unit is 352.50 rupees. So here in the question, the values are given. The per unit has to be calculated for the year 270. So salaries are 60,000, 10,000 and 20,000 has to be considered. Then we'll have to go for dividing. With the help of production units, we'll get 1,200. If we divide, it will be 50 rupees, 8 rupees 33 paisa and 16 rupees 67 paisa if we are going to divide with the help of production units. Now the cost of production and cost of sales are one and the same. That is 4,23,000 and per unit it comes to 352 rupees 50 paisa. Now we have to add selling expenses. So selling expenses, regarding to the selling expenses, what they have given per unit it will remain unchanged, means whatever the per unit value calculated in the year 2016 is 30 rupees. So 30 into 1,200 it comes to 36,000. Therefore, the total cost comes to 4,23,000 plus 36,000 is 4,59,000. Per unit is 382 rupees 50 paisa. Now we'll have to go for calculating the profit with the help of sales. So the profit, they have given 10% on selling price is nothing but 90% on cost. So we'll have to calculate first. The 90% on cost is nothing but 4,59,000 into 10 by 90. It comes to 51,000 is the profit. Then if you are going to add with the cost, the total sales value will be for the year 2017 is 5,10,000. Per unit will be 4,25 rupees. Then the per unit of profit it comes to 42 rupees 50 paisa. So this is how we need to go for calculating the statement for the quotation price for the year 2017 for the production units of 1,200. So with this I am going to end the session. Thank you.